Hi, I'm Ranjan Bhattacharya. I'm the event host for the Baker Street Property Meet, and I'm with Am Kainth here. And Am is going to be speaking tonight at our meet. We're just getting all set up here. We've got more than 200 people coming to this meeting, and it's a special all about property joint ventures. What's your talk going to be about today?
So, Ranjan, thanks for inviting me to your event. My talk today is really about joint ventures and working with other investors. Funnily enough, I remember years ago when I used to come to your networking events that you used to hold in Covent Garden, that you always promoted that people should spend just as much time looking for investors and investment partners as they should do looking for property deals. Now, up until that point, I was very guilty of spending all my time looking for investment opportunities and looking at opportunities from a due diligence perspective. And unfortunately, I'd always look at finance as the last chunk in the armour. Now, once you've found and sourced an opportunity, spent all your time doing all your research and ensuring that it's all validated, it's actually too late in the day to then go out looking for finance investment partners. And that was my biggest takeout. And I remember one of the things that yourself and Vanish, who's also speaking tonight, said is that you should always look at investment partners and funding partners when you don't need them.
Yes, absolutely.
So that you've got them in your armoury, and you should spend as much time, if not more, looking for them. So my talk really is actually, in summary, highlighting some of the case studies and investment opportunities that we've worked on and developed, putting that strategy into effect, and demonstrating how, going forward, we're looking to use more investment partners as the banks are tightening up with interest rate margins and stress tests on development finance products, and also on the buy-to-let arena. So if you're an investor, you've now got to put in a higher deposit. It's more important to ensure that yields are strong and rock solid.
Absolutely.
And I think one of the ways that you can demonstrate to a bank or a lender is that you've done your homework, you've got some backing, and you're not looking for the maximum amount of borrowing. Because I think that's the thing that banks are most fearful of.
So no 85% loan to values?
Not at all, not at all, not at all. And I think having kind of progressed and become more experienced, I've also moved away from the highly leveraged products.
Yes.
What we do and what I'm going to talk about tonight is how we look for packages of products. So the two case studies I'm going to talk about today, one was a 12-month turnaround project and the other was a 2-year project. We bought the investment opportunities for cash, we developed them, and then we refinance them after 6 or 12 months. So when I talk about one project being 2 years, that was actually 2 years to then move it over to a bank funder.
Yes.
We actually,
short-term financing to get
Absolutely.
it going, long-term financing when it's all done.
Absolutely. And what we've in fact got are two assets that the banks actually turned down at the start, which is crazy because they're very high yielding. We've seen huge capital growth. And if I could have persuaded the banks and lenders at the time, 3 or 4 years ago when we moved into this marketplace, it's crazy because now they're sort of looking at my numbers and saying, oh yes, we'll refinance that out. And I always ask them the question, why wouldn't you finance it at the start?
Yes.
But now I understand, because now I've turned the table and look at a deal the way in which a bank looks at it. I scrutinise it differently.
That's a very important point, to actually look at the deal not from the investor's point of view, but from the bank's point of view.
Absolutely.
And try to look at it with their shoes on as far as risk.
Absolutely.
Another thing I wanted to talk to you about a little bit, because I've spent some time with you. You've shown me around some of your developments, and you have, like many of us, started with buy-to-lets and residential properties, but graduated over to commercial properties.
Yes.
Why? What are the benefits that commercial property brings you?
Buy-to-lets are great. They are great long-term assets. But I moved over to commercial investments and to offices because when I went into property full-time in 2009, having left the corporate world, I needed to maximise yield. I needed to replace my income. And I try to do things differently, so I tend not to follow the crowd. And at the time, everybody I spoke to were heavily involved in HMOs. And I thought, well, that market's saturated. Everybody's looking for HMOs. Everyone's looking for freehold buildings. I don't really have that capital at the moment. So I started to explore and look at commercial properties by default, really, because knowing what buy-to-let properties were costing in sort of zones 2 to 4 in London, I had a threshold of income versus expenditure. And when I looked at commercial properties, some of these properties were 2 to 3 or 4 times the size of the residential units that were on the market. And I thought, I was falling in love with the asset. I thought if I could be creative...
Price per square foot.
Absolutely.
The price per square foot of commercial.
Absolutely.
And then the price per square foot of residential. That's what...
That was the hook.
Yeah,
and with buy-to-lets, it was difficult to get the margins to sort of buy and acquire the asset. But with commercial property, as you say, I looked at commercial property that was often disguised under a commercial wrapper, but it looked like it could be a residential property. So the doomsday scenario would be, yes, I'm buying this commercial property. If it doesn't rent out, because when I bought my first commercial properties, it was at the height of the last recession. And I thought, what am I doing? This was a massive step change for me. And the fact that the banks aren't lending to me, am I crazy? Am I seeing something that the banks aren't seeing? But I was determined, because I looked at the building, fell in love with it, beautiful courtyard. You'll see from the slides this evening that, you know, it was a picturesque development. And I kind of looked at it and I thought, this looks like a residential building. You've seen the one in Clapham.
Yeah, they're all
it's a townhouse or it's 3 apartments, but at the moment it's a commercial building. Now, at the back of my mind when I bought it, I did quite a lot of work because I wanted to maximise the yield.
Often it's sometimes buying the property, getting it let out, making it make a profit, but there's a long-term development angle which you can exploit at some time.
Absolutely.
I mean, I know that we can go on for hours like this. We've run out of time, but we'll definitely have you back for a bit more of a longer chat and talk a little bit more. There are plenty more of these little videos that you'll find by clicking around the screen here. Join us with one of those videos, or join us at one of these live events that take place every month, bakerstreetpropertymeet.com.